Have you ever felt a subtle drain on your finances, a persistent leakage that seems to defy explanation, even when you believe you are being careful with your money? This isn't always about grand expenditures or lavish lifestyles. Often, it's the insidious accumulation of small, untracked outflows that collectively impose an invisible tax on your financial well-being. This tax is paid not to a government, but to a system that thrives on financial opacity, leveraging human psychology against our best intentions. It's the mathematical reality of modern consumption, where the absence of conscious tracking transforms minor decisions into significant financial erosion, silently undermining our ability to save, invest, and build lasting wealth. To truly understand this invisible tax, we must delve into the behavioral economics that make us susceptible, the systemic mechanisms that exploit this vulnerability, and the profound impact it has on our long-term financial trajectory. The human brain is remarkably adept at rationalizing small, isolated purchases, especially when they fall below a certain psychological threshold. A daily coffee, a convenient online subscription, a spontaneous snack. Individually, these seem insignificant. However, the cumulative effect, when untracked, is staggering. This phenomenon is rooted in cognitive biases such as mental accounting, where we categorize money differently based on its source or intended use, often leading us to treat small amounts less rigorously than larger ones. The present bias further exacerbates this, prioritizing immediate gratification over future financial health. Without a clear, objective record of these microtransactions, our memory distorts, minimizing their impact and creating a false sense of control. The emotional satisfaction derived from these small purchases provides a dopamine hit, reinforcing the behavior and making it incredibly difficult to break the cycle without external accountability. This psychological blind spot is precisely what the modern consumer landscape is designed to exploit, creating an environment where spending is frictionless and often invisible until it's too late. The systemic mechanisms that facilitate this invisible tax are pervasive and often intentionally opaque. Consider the rise of subscription services, where a small monthly fee for entertainment, software, or even physical goods can quickly add up to hundreds or thousands of dollars annually, often forgotten until a bank statement review. Digital payment methods, while convenient, further obscure the act of spending by removing the tangible exchange of cash, making transactions feel less real. The gamification of shopping, loyalty programs, and targeted advertising constantly nudge us towards consumption, often without a clear understanding of the true cost or necessity. Furthermore, the complexity of modern financial products, from credit card interest calculations to investment fees, can create a fog of confusion that discourages detailed scrutiny. This intricate web of psychological triggers and systemic design creates a powerful current that pulls money away from individuals who lack a robust tracking system, effectively levying a hidden charge on their financial ignorance or inertia. It's a subtle but powerful form of wealth transfer from the untracked to the highly organized. The long-term impact of this invisible tax extends far beyond mere inconvenience. It fundamentally alters one's financial trajectory. The money that could have been saved, invested, or used to pay down debt is instead dissipated through 1,000 tiny leaks. This erosion of capital means a slower accumulation of assets, a delayed path to financial independence, and a heightened vulnerability to economic shocks. The compounding effect, often lauded as the eighth wonder of the world when applied to investments, works equally powerfully in reverse. When applied to untracked expenses, small, consistent outflows compound over time into substantial lost opportunities. Moreover, the lack of awareness about where money is truly going prevents individuals from making informed decisions about their spending priorities, leading to a disconnect between their values and their financial reality. This perpetuates a cycle of financial stress and stagnation where individuals feel perpetually behind, despite their best efforts, simply because they are unknowingly paying a continuous, invisible levy on their lack of financial oversight. To reclaim control and dismantle this invisible tax, a fundamental shift in approach is required. From passive consumption to active financial stewardship. This begins with rigorous, consistent tracking of every dollar, transforming the abstract concept of money into a tangible, accountable resource. Whether through budgeting, apps, spreadsheets, or even a simple notebook. The act of recording forces conscious engagement with spending decisions, revealing patterns and identifying leaks that were previously invisible. This awareness is the first step towards intentional allocation, allowing individuals to align their expenditures with their true priorities and long-term goals. It also involves critically evaluating every subscription, every recurring charge, and every small purchase, asking whether it truly adds value or merely contributes to the invisible tax. By understanding the behavioral economics at play and the systemic designs that exploit them, individuals can develop strategies to counteract these forces, transforming themselves from unwitting payers of an invisible tax into conscious architects of their financial future. The math of money is unforgiving, but it is also empowering. Once understood, it can be leveraged to build rather than erode wealth. Ultimately, the journey to financial freedom is not just about earning more, but about retaining more of what you earn. The invisible tax on untracked spending is a silent adversary, but it is not invincible. By embracing transparency, cultivating financial awareness, and implementing consistent tracking habits, you can expose this hidden levy and redirect those resources towards building the life you truly desire. It requires discipline, yes, but more importantly, it requires a clear-eyed understanding of the subtle forces at play and a commitment to mastering the mathematics of your own money. The power to eliminate this invisible tax lies within your hands, waiting to be unlocked by the simple yet profound act of knowing where every dollar goes. This knowledge is not just power, it is liberation.